Welcome to the 2024 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Wednesday, October 16th, 2024 edition. Thank you for your support. Please be sure to subscribe to this channel for the latest interpretation of financial news as it becomes available. Well, the Dow Jones is riding high today, as well as the S&P 500 and NASDAQ as fresh earnings rolls in. Dow Jones is over 43,000 points right now, up 320 points for the day as we get near the end of the day here for the trading session. NASDAQ is up, S&P 500 is up over 5,800. Crude oil is down, but gold is up, almost pushing $2,700 now. This is of heating up. Things are heating up as it continues to read back. As far as the earnings reports came out, we saw that artificial intelligence and NVIDIA stocks were down a little bit, but NVIDIA was up today by 3.5%. Did a little dead cat bounce. Morgan Stanley's quarterly report also helped to revive Wall Street. And the big bank earnings are coming up later this week as well on Thursday and Friday. Shares rose more than 7% following the release of the Morgan Stanley news. Now, there was some disappointing earnings from ASML and United Health Group, as well as some luxury stalwarts LVMH groups as well. And so there's some weaknesses. But like I said, gold continues to go up as debt continues to climb as well. Global government debt surpasses $100 trillion for the first time, and so it's not just a U.S. problem. And I know a lot of doom and gloom channels, financial channels, they painted the debt load as just a U.S. problem. But as we know, the global debt, worldwide debt, all of these countries, the G7, the G8, the G20 countries, many other countries, the developing nations, they carry a lot of debt on the balance sheet, but it's getting to astronomical levels now. So global debt surpass $100 trillion for the first time. And you know, on this channel, like I said, this is all leading up to the global reset, the new economy, the autocratic economy, technocratic economy that we're going to be seeing here. That's going to be a mix of the virtual and the real reality type of economy with a one world CBDC type of thing that many people have been parroting on these financial channels and shows. That's what's going to be coming. And because right now we have a system now that, like I said, eventually the debt to zero is going to be so much that it's going to be too much to just put digits on the screen or to calculate, and not have the physical paper on hand or gold on hand. And so we just need a reset totally. And that's what all the nations of the countries of the world are going to be seeking here once the debt level gets so high, that hyperinflation gets so high that people are going to be begging. They can no longer afford the basic necessities of food, shelter, transportation, utilities, and security. So a new international Monetary Fund report showed that the government borrowing will reach 93% of global GDP by the end of this year and 100% by 2030. 2030 is such a big number, as you know, in terms of the World Development Goals and all the UN goals that people have been talking about. And so we're heading toward that very, very quickly here. Japan obviously is up at 252% of their GDP debt load. The United States is right behind at 134%. Even China is at 110% of their debt load. The EU is at 83%, and Latin America is at 67%. Sub-Saharan Africa, obviously, they're not fully developed, but they're at 52% as well of their debt load. So everybody's carrying debt. It's not a big deal, but it will be a big deal later on once we start getting into the new global reset. Now, U.S. consumers see higher, longer-run inflation, rising delinquency risk. So in other words, U.S. buyers and shoppers are seeing higher prices for longer, and we knew that. That's no surprise here. I've been telling that you guys, ladies and gentlemen, that we will be seeing those prices stay up for now, even if we don't have a supply shock shortage going into the holidays and going into 2025. Higher prices are here to stay because American monopoly businesses realize they can continue to charge American these prices, and we have nobody to advocate for us. We have no consumer financial bureau to advocate for price reduction. So we don't have that. So this was going to be happening here, and many Americans feel like they're going to be rising delinquency in terms of credit card delinquencies and possibly housing delinquencies in terms of not being, you may pay off your mortgage, but if you can't afford the property taxes or the insurances or whatever fees they have, they put a lien on your house, and be going back to the bank or something. So these worries are growing as credit cards average interest rates is at 29%, 30% APR, and it's continuing to go up. So people are squeezed in many ways more than one. Uh, and another thing that was odd about this economy was that mortgage rates continued to rise from a 2-month high. This is defying conventional interest rate cut wisdom. Normally, when you cut rates, mortgage rates are supposed to go down, but now mortgage rates are going up here for the first to its highest level since August, as prospective home buyers don't get the relief they may have expected after the Federal Reserve enacted the first interest rate cut in more than 4 years. So this housing market may not cool off to another 2-3 years. We're looking at 2026, 2027 when we start seeing the actual reduction of prices nationwide in some of these hot markets by more than, let's say, 40%. Average 30-year fixed mortgage rose to its highest level since the week August 9th at 6.52%. This is according to Mortgage Bankers Association survey. It's the sharpest 2-week jump for the 30-year mortgage rate since February 2023, according to Bloomberg. So now we're looking at the third consecutive week of mortgage rates increasing. Now, I wonder if this is going to be in correlation to prices increasing. Somebody tell me, have you seen houses prices in your area increase in terms of comp sales? Are the housing prices coming down? Are they increasing since mortgage rates are going up? How does that work? Is that somebody can fill me in on that? I'm not really familiar with that. But mortgage applications fell 17% last week compared to the year prior. So mortgage applications are going down, rates are going up. Salaries are not going up, they're not matching inflation. As you know, the COLA that the Social Security Administration and the COLA increases for your pensions and stuff like that is only going to be between 2 and 3% this year. It's not going to be outpacing real inflation, which is at 8 to 10% already this year. So we're going to have an issue with that as well. Continue to prepare, ladies and gentlemen. Continue to stock up on the necessity things that you need. I'll talk to you very soon tomorrow after more companies report their earnings, and we'll see how long this Dow Jones streak of going up goes up, and we'll see how long gold is going to be going up as well, and cryptos as well. So thank you for joining me. Please be sure to subscribe, and I'll talk to you very soon. Have a great Hump Day Wednesday.